Hello there, my friends. Chris Marcus here with you again on Thursday, July 13th, 2017. And today, since there's no big news going on in the market, I thought I'd share a resource that, whether you're a silver investor or just market investor in general, or just interested in what some of the stunning things that are happening behind the scenes, I wanted to share with you Clif High's Webbot channel, which, if you're not familiar with, it's pretty fascinating. Clif High is a former programmer, or I guess he's still a current still programs. And basically, he created this algorithm back in the 90s. He was trying to make better trades and see how he could understand what was going on in the stock market and use that to his advantage. And basically, his program, which is called the Webbot, scours the internet for all of the search terms and essentially forms a snapshot of the consciousness of what's going on and extrapolates things that are yet to come based on the emotional tone of language that the way his model calibrates it, which is pretty fascinating. It's essentially attempting to read the future, which certainly my first thought was, well, that seems pretty much of a lofty goal. Although, having followed Clif for about a half year now, certainly the thing that stands out the most is that he has been all over the cryptocurrency moves. And if you go through some of his past reports and look at what his model has picked up, especially in terms of different price points that Bitcoin was going to hit in certain time ranges, and certainly his Bitcoin predictions have been pretty stunning. He predicts that over the summer we're going to continue to see wild action in the cryptocurrencies, and some of the numbers he throws out by next year of the value of the cryptos, it's worth going over and checking out his channel. Although perhaps what caught my interest first was what he mentioned about silver. Now, again, my perspective is that, as we've talked about a lot before, that silver is a manipulated market. Basically, you have a lot of paper sales of the same ounce of metal, so essentially however many hundred people think they own one piece of metal, so if they all request delivery, it's not there, and to actually fill those orders, you would see a much higher price. If you go back to 2011 when silver was up to $49, I still continue to believe that we were perhaps seeing the verge of the collapse of the dollar, because remember, that was back after QE2 and sentiment was a lot different than now. People were noticing all the money printing that's been going on, but then you saw the spike down, which we've now seen transcripts and evidence of that was manipulative behavior, not naturally the market forces. So everything that I've seen since then confirms that same storyline, which makes you wonder, well, if they hadn't essentially broken the law and cheated, where would silver have gone? Were people rushing out of the dollar and finally saying, enough of this printed Ponzi scheme? So my school of thought is that silver was $49, and the only reason it went lower was because of a lot of paper selling. Then certainly, had there not been the manipulation, I always thought, well, first would be somewhere north of $50. Then, as you study the numbers of the actual supply and demand, look into some of the history and how so much of the silver is used, and again, the fact that there's this massive short position that I'd correct that and say not if, but in my belief, when you get enough physical buying is naturally going to push the price higher. You know, when I look through all those numbers, and again, it's a little bit of a creative exercise because there's so little actual, we don't know how much silver there really is. Well, I guess that's more so in the gold market where, is the gold in Fort Knox, or does the Fed have the gold? How do you really know what the price is if, we're basing it on supply and demand that we think is there, but we find out isn't accurate? similar with silver. And if you're interested in really looking into some of the numbers based on how much is mined each year, which is usually around 900 million ounces, a little less than that, I believe. I think it was 880 million, but somewhere around there on a yearly basis, and about 700 million or so, somewhere in that ballpark, are used in all the different applications that require silver. Which again, another advantage of silver over gold is that most of the gold just stays there somewhere, whereas the silver, the majority of it is actually consumed, and there's not a lot left over for investment. So you would think if someone, it doesn't take a lot of money to really end this, which again, I wish I could tell you when, but certainly it seems like it won't be another 20 years, that's for sure. And could be as early as tomorrow if you watched our videos about Andrew Maguire and how he sees some really big sovereign-sized orders coming into the market, then that could certainly make something like that happen sooner. So anyway, what was interesting with Clif High's report, I remember hearing a couple interviews with him where he was talking about $125 silver, $600 silver, and of course you see on the internet some numbers that get even bigger than that, which now again, to keep people sane in a sometimes insane world, yes, I realize silver's trading 15, 16 bucks right now. If you walk around the street and tell them that, hey, there's something trading for $16 that's worth multiple hundreds of dollars, of course, they're going to be met with a little skepticism. I would counter that probably those skeptics have never really looked into the actual numbers or data that we have. Or perhaps more importantly, thought about whether the U.S. Wall Street financial system economic model is viable. And let me break that down into two parts, because this is something I rarely see discussed that I think is really important and can help you get a better idea of what to expect or what to think. Again, not that we know the exact answer, but just giving you some possibilities that I think you'll find helpful. The way I've often looked at it is this, where there's a couple moving pieces. A, if you're looking at silver in terms of price per dollar and how much silver is there, how many dollars are there, you have that moving variable that the Fed could come out next week, next month, and say, hey, we're doing QE6 or QE7 or whichever one they're up to. So there's always that factor. Of course, if they actually unwound the balance sheet and raised interest rates, then, that would be a different story. I don't see any plausible way that that's going to happen. But still, so that's one variable, whether there's more money printed or not, or if the supply of silver actually changes, which about maybe a week or two ago, actually I think it was last week, one of the biggest silver mines was shut down, which is a reduction in the supply. Of course, we saw the flash crash the day after that, rather than typically what you would expect in a normal functioning market where if the supply goes down, there's less. So the price normally rises. Again, we're not doing a natural market here, so, which is okay. And when you understand these things, then you can use them wisely and intelligently. So anyway, you have those factors. You also have the manipulation factor, and what I guess a good way of thinking about it is that, actually, let me step to point 3 for a second, and then we'll come back to that one. Again, if you believe that we're nearing the end of this reign of the dollar, and perhaps, again, like I said back in 2011, when maybe that was that point and the manipulation of the metals prevented that from unfolding back then. But if you think that there's so much printed money and that we're going to reach that point where the dollar crashes, like basically every other printed currency in history, then, is a much different story, because the dollar has essentially become confetti, then, silver could be $1 million an ounce. The stock market could be, instead of 21,000, could be 200,000 if you print enough money, or the value of the dollar goes lower. Again, it's not, hopefully that's clear enough. Just right now, people still have some degree of faith in the dollar, so you can take the dollars you have and buy things at a certain price. But when these currencies really deteriorate, which is what I see happening some point in our likely nearer future. So that's another scenario if the Fed goes nuts. So when you see someone saying $10,000 an ounce for silver, I don't know if that's going to happen tomorrow, but whenever we reach that point that these currencies really fall apart, then silver or Bitcoin being money, then it's almost like that dollar price doesn't matter, because you want what still has value. You might not want to trade it back into dollars. So we'll hold off more printing or the collapse of the dollar, but just think about, let's say the world stays the way it is today and people, for the most part, you have the status quo, but simply the manipulation in the silver market ended. So we're not talking about complete Armageddon or Book of Revelations unfolding, but just that this massive paper short silver position was unwound and just you had natural supply and demand meeting each other. What would the price be then? Now, official warning, there's a lot of guesswork going on here. Excuse me. First, like I said earlier, I think it would be somewhere logically just north of the $49 high we had in 2011. And when I hear the arguments behind triple-digit silver, and again, looking at the deficits that have been running, the growing demand for silver, it seems plausible to me that you could have well north of 100, possibly into the multiple hundreds of dollars, just because it's, and I know it can sound wild, but when it's the same way that people thought mortgages were going to keep going forever, and no one could have comprehended that the market could sink as low as it did, yet, because this normally doesn't happen except when there's a manipulation in the market. So yes, I understand that's a big number, and to get back to our original point with Clif, one of the things that I found so interesting about his forecasting model was that he sees, and his model picks up language of $600 silver. Now, he's actually been saying this throughout the last couple of months, which, as we know, has not happened. And I understand it's easy to say, oh, this guy said this and, it didn't happen, so you dismiss it. And maybe his predictions aren't right. Who knows? What I found interesting, again, seeing the Bitcoin predictions and how those have played out, well, it seems like there's something here. And what he's commented on is that his model has struggled with the silver price because of the manipulation. So what I have been continuing to evaluate is, okay, is it just the manipulation? But is there something, even if the dates are wrong, is there something to what his model is picking up? Now, in most circumstances, and a lot of the similar forecasts and predictions like that, where you see big numbers, I'm often a little skeptical, especially when you see people predict things that come and go. And again, which is why I like to always be careful and say what I believe, and also factor in that I don't know the timeline. I don't know that many people outside of perhaps the guys at the banks who are running some of these things do. But aside from Clif's Bitcoin predictions, what really stands out to me is if you just listen to the guy talk, it's quite an experience, because I'll sit there and just be blown away by feeling as if I'm hearing one of the most intelligent humans that I've ever heard speak, just in the sense that, yes, he talks about the financial markets, but then when he talks, he'll get into physics and certainly the thoughts on this model of consciousness and what we're actually doing here, and it just matches and confirms so much of what I've learned from so many different areas of life where, it's not he's not some high school kid who's just saying, hey, the banks are rigging it, it's going to go to this. So again, in either case, go check out some of Clif's videos. They're all pretty darn fascinating. The interviews are just stunning, and decide for yourself. Again, trading and investing, it's like poker where you don't get to see everyone's cards. So there are a lot of clues that are given out. You notice the patterns. I find the pattern of most of what I experienced when I was working on Wall Street as much as what I've seen since then. A lot of it is designed to mislead people and work out well for the banks. When I hear government officials talking, again, they say one thing and often it turns out to be another. So I find a big part of it is letting go of some of the emotion of what we think people should do, or just pretend it's like a video game. Pretend they're just cartoon characters. And if you can let go of some of that frustration and then just notice, hey, this guy says this, and usually that happens. This guy says this, and you combine all of that, you look for clues. Hey, we talked about Andrew Maguire. Maybe he's right, maybe something else happens, but given a lot of the other things that he said, it's at least worth registering to me. And especially what I found interesting is some of the people that I find are usually conservative yet have been somewhat on high alert. There's a few of them. So again, have we seen that event that says, boom, we're in the middle of this now? No, we haven't. But that's the fun. That's the fun of trading, where you're trying to figure these things out. The good news is that the majority of the people, well, I don't want to say this is good news at someone's expense, but again, obviously it's what I think, but in my opinion, if you're grasping this and seeing some of these same things, then I think you're ahead of a lot of what the rest of the market is doing. And there will be a point where you can be rewarded greatly for that. So I think you're farther along than you might realize, and hopefully the information I'm giving you is helpful. By all means, please don't do anything just because you heard me say it. I'm not giving specific advice for anyone's situation, but rather trying to just share a perspective that I found incredibly helpful and valuable in terms of going from what I was trained. I think back about my experience of going first to Moody's, then to Wharton for business school, doing an internship with Merrill, and then working on a trading floor, and seeing how there's really a very specific mentality that to keep ascending, you almost have to believe what that script says. And you don't become a high-level banker or trader in some of these shops if you're out there talking about gold and silver, which was part of my progression out of the industry. I always remember it was kind of funny. My last year there, I went to the holiday party, and this other guy I knew, nice guy, and he was like, hey, there's the doom and gloom gold and silver guy, which I think is part of any time where you're standing out against the crowd and saying something that most other people don't want to hear. That's fine, because the reason that things are priced the way they are is that people believe X. And when the majority thinks this, and you can spot the flaw and see something they're missing, and you know why they think that, and you position yourself accordingly, that's when you can have really great trading or investing success. And it's not always easy, but that's why we're here to help. So with that said, again, check out some of Clif's videos. I think you'll really enjoy them. You'll end up a heck of a lot smarter in either case. Fascinating information. And you can see for yourself some of his predictions, learn about his model. I think there's a lot of value there, regardless of whether maybe the silver predictions work out as he says, although perhaps the whole point here was just, while certain things seem extreme, there are forces and a lot of logical evidence and data supporting that when this does end, we could see some wild, I think we will see some stunning moves in the markets, even more so than what we saw when the dot-com bubbles and housing bubbles were being inflated. So, hope this helps. Leave your comments below. Gotten a lot of great comments. Appreciate your feedback. It's helping.